I didn't grow up around money, but a few years ago, something clicked, and I started paying attention to what wealthy people actually do with their money, not just what they say they do. One thing became clear. The rich don't just save money, they grow it. And what shocked me even more, a lot of what they're investing in right now isn't out of reach for regular people like you and me. Here's exactly what they're putting their money into, and why I've started doing the same. When I first heard the term private equity, I thought, that's not for me. That's billionaire stuff. But I learned something wild. Thanks to crowdfunding platforms like Republic and Start Engine, you don't need $100K to get in anymore. I personally put $250 into a fintech startup I believed in last year. It's high risk, yeah, but if it grows, so does my little slice. Angel investing used to be something only rich people with connections could do. Now anyone can participate at some level. That doesn't mean you throw money into every shiny startup that pops up. But it does mean the door is open in a way it wasn't before. The rich understand that backing early ideas is a long game. They don't expect every investment to win, but when one does, it can change the math completely. Another area where the wealthy are parking money right now is real estate. And it's not just the luxury penthouses or beachfront homes you see on TV. What's happening is a move into accessible real estate investments that don't require millions. Fractional real estate platforms like Fundrise or Realty Mogul allow everyday people to invest small amounts in real estate projects. That means you can tap into the same wealth-building tool the rich have relied on for generations, but without needing to own an entire property yourself. Wealthy people have always loved real estate for two reasons. First, it produces income. Rent checks, lease payments, or commercial contracts provide cash flow. Second, it tends to appreciate over time. Even when markets dip, property has a way of bouncing back and climbing higher in the long run. When inflation eats away at the value of money, real estate holds strong. That's why so many rich people see it as one of the safest long-term bets. And now, the same model is available in bite-sized pieces for anyone willing to start. Beyond that, something else has been quietly growing: alternative assets. This is where the rich have always had an edge. They buy things like art, collectibles, farmland, even music royalties, like not just because they enjoy them, but because they know they appreciate over time. For most of history, this was off limits to regular people. If you didn't have millions, you weren't buying farmland or paintings, but the game has changed. Today, you can buy fractional shares of these assets, just like stocks. The idea is simple. Instead of needing the full amount to buy a Picasso, you invest in a small share of it. Instead of buying 100 acres of farmland, you own a piece through a fund. That's how the rich think. Spread money across things that hold value no matter what happens in the stock market. And now, the everyday investor can do it too. Of course, stocks are still a massive part of the story. But here's the difference. The rich aren't trading in and out of positions every week trying to time the market. They don't waste energy on guessing what will happen tomorrow. They invest in ownership. They pick companies they believe in, hold for the long term, and let compounding do its job. Many of them favor boring, stable businesses that generate consistent returns. It's not about excitement, it's about growth. What most people get wrong is thinking you need insider information or risky bets to succeed. In reality, many wealthy investors stick to broad index funds and blue-chip companies. They know slow, steady growth beats flashy wins that rarely last. While others panic during downturns, the wealthy see opportunity. They buy more when prices are low, and they stay invested when markets recover. That's how wealth multiplies over decades. Another place the wealthy are putting serious attention right now is into technology and innovation. Things like artificial intelligence, clean energy, and biotech aren't just buzzwords. They're industries shaping the future. The rich understand this. They don't necessarily know which single company will dominate, but they know entire sectors will expand massively over time. That's why they invest in funds and ETFs that spread exposure across these areas. It's a way to ride the wave of innovation without needing to pick winners perfectly. What's fascinating is that none of this is out of reach. Whether it's startups, real estate, alternative assets, or technology funds, the average person can start small. The gap isn't always money, it's mindset. Most people think, I don't have enough to invest. But the rich didn't start with millions either.